Hey everyone, this is Kirk here again at OptionAlpha.com. Welcome back. Thanks so much for joining us again here tonight on the video recap that we do here at the end of the day where we go over our opening and closing trades. Now today's May 22nd and we only had one opening trade and one closing trade for today, but they were both in big name stocks, so Netflix and then Google. And I'm going to go over the Google trading alert first, the closing trade that we made there, and talk about that before we get into Netflix and our calendar spread. So for Google, what happened is that we actually entered this originally a 525, 530 debit call spread for June. And we actually made this trade back at the end of April. So we've held on to this thing for almost a month now. And it really is a good testament to holding on to this 50-50 trade that we had originally made. So when we made this trade back at the end of April, we actually were just trying to get some long exposure. And it took a while for this thing to show a profit, and a significant one at that. And finally today we were able to sell back to the market our 525, 530 call spread for a 370 credit and take in about $110 on each spread. So it was a nice $220 profit for this trade in Google. And again, since it was originally a 50-50 bet, we definitely want to get out of this trade now and not kind of risk it through the rest of July. But if you look at the chart here of Google, this was the actual day that we had originally bought the spread. So it was very close to the bottom of where the market was trading. And you'll notice that just after that, Google went back in or into the money for our strikes and then came back up and really didn't show a profit, went back into the money for our strikes, and then just in the last couple of days has finally started to move higher to show profit. And the reason that I highlight this in particular, because we have time tonight, is because you don't know when you're going to get an opportunity to take profits. And you just have to hold on to that trade. It is a 50-50 bet, but you just have to hold on to that trade knowing that at least at some point between now and July or June expiration, we were going to get an opportunity to take some money off the table. And since we got that opportunity now, we got that move that we were expecting, albeit late, we need to take this trade off the table and just move on to the next one. It's not a high probability trade, it's just a trade meant to keep us active. So in that sense, we definitely want to take the $220 and run with it. Now, if we move on to just the opening trade that we made here today, it was just one trade, and that was in Netflix. Now, Netflix has had a pretty significant rally here recently off the bottom and has been one of the leaders in really the NASDAQ and kind of the tech sector, leading us higher. But I do think that Netflix is going to have a little bit of difficulty, at least maintaining this move. And that's why I decided to do a calendar spread below the market, or a put calendar spread in Netflix. So the setup on this, and we've gone over a lot of these recently because it's just a low volatility time, so calendars are very, very easy and popular to trade. And the setup on this one is that we're trading just the 370 strikes. So only focusing on one strike, so not doing anything vertically as far as a strike like 525, 530, just doing the 370 strike puts. Now what we do is we end up selling the front month option, which is the June, and buying the back month option, which is the July. And that creates our calendar or horizontal spread that we're trading. And we only do this in low volatility because if volatility does increase, and especially if the stock starts to sell off, we could see an increase in volatility. That increase in volatility is going to be better affected by being long the July options and being short the front month or June options, which will decay faster. So that's really the idea behind this. Now, we did pay a hefty premium for this, and that's only because this is a really big stock. So it's very highly traded, very liquid, very high price point at 370. So we paid about $670 for this spread. That's why we only did one, just trying to keep our risk size small. But you'll see here that this actually is a really, really good trade and could start to make us money even if Netflix starts to slowly move down from here. 370 is an out of the money strike, so we did focus our attention a little bit out of the money for Netflix, but even if we get a slight movement lower in the stock, we could actually make some money. All right, so here's a look at Netflix, and you can see that it's definitely made a pretty significant move here in the last couple of weeks, a move that I don't think is sustainable, at least at this rate. So I think the stock is going to have a little bit of a tough time kind of rallying from here, given that it's had such a good move off of the base. Now that said, our strike is around 370, which is just slightly out of the money. And we've talked about this before. We don't usually want to trade these things right at the money. We want to kind of trade them slightly out of the money, be a little bit directional on our move. And we'll see that implied volatility is down in the 16th percentile. So it's very low for Netflix, which is historically a pretty volatile stock. And we could see implied volatility very easily get back up into the 30s and 40s, which would double where it's at from here and obviously help our position. Now, if we go to the Analyze tab on our Thinkorswim platform here, you guys can see exactly what our spread looks like, as long as my computer would help me out here. There we go. So you can see exactly what our spread looks like right now in Netflix. We have our spread down here below. We are short the June 370 puts and long the July 370 puts. So that's the +1 and -1 that you see below. Now Netflix again is trading just above 390, which is right about here on the actual Analyze tab. And you'll notice that this trade is already starting to make money right now. If everything stays the same and Netflix doesn't move, we'll actually make a little bit of money at expiration. But the real sweet spot in this trade is right around 370. So that's where this profit loss diagram, or the red line, really peaks out. But you'll notice that by paying a higher price in the debit for this calendar, we actually give ourselves a pretty wide range to make money by expiration. So the range in which we can make money by expiration is just a little bit south of 350 and actually around 395 or so. So we have a pretty big window of opportunity between now and June expiration to make money in Netflix. Ideally, we just want the stock to move a little bit lower. So anywhere between about 350 and 395 is ideal territory for us to make money going into expiration. If I head back to the charts, that's pretty much anywhere between here, 350, and about 395, which is just about here. So you can see that we've given ourselves pretty ample space for Netflix to continue lower, which I do think it will. I think we'll get an opportunity, at least at some point, for this thing to be a little bit closer to around 380, possibly 370 or so, at which point we'll close out the trade and sell it back to the market before June expiration. So that's the idea with the Netflix trade. Again, a little bit higher price point, but you also have a wider opportunity to make some money. So as always, I hope you guys really enjoy these videos. Please ask as many questions as you want right below this video. I'll get back to all of those tonight or tomorrow before the open, and happy trading.